Last week, we wrote about building wealth through real estate. This week, we're going to tackle the other side of the coin and look at the real estate forecast for 2025. And we're going to talk about weathering economic storms. Now, the real estate market has always been a hot topic, but recent economic data suggests that homeowners, buyers, sellers, and investors in Southern Ontario, which is one of our most robust markets in the country, might be facing uncharted waters. Record high household debt levels, mortgage obligations, a lot of mortgages renewing at much higher rates than what they were taken out for initially 5 years ago. And the question is, how are Canadians prepared to handle economic storms? Hey there, and welcome to issue 448 of the Guelph Weekly Sales Report. We unpack everything real estate related. We want to make sure you are the best educated, real estate savvy people within Southern Ontario. So, household debt at a glance. Canadian household debt has reached a staggering height. And according to recent statistics, Canadians owe $1.85 for every dollar of disposable income. That's the highest debt to disposable income ratio for all of the G7. Typically, on average, for most of the G7 countries, it's closer to $1.25. So that's significant. And a significant portion of this debt comes from mortgages. So now, other loans, car loans, consumer loans, interest rates have started to come down, but inflation is still having an impact on the budgets. There's a lot of debt obligations going on, and the result, there's less financial breathing space for a lot of families and people in this country than we've had before. And how are we going to weather any economic changes that come together? So the impact of debt on homeownership. So dropping interest rates, that's good news because it's making it more affordable, particularly for people with variable rate mortgages. However, the big elephant in the room is coming this year and next year, where all those people that took out 5-year fixed rate mortgages that were sub 3%, sub 2% even, are now coming due. And we're looking at triple the increases. We're looking at doubling up on payments. And so for a lot of people, that have built their budgets around those low payments, there could be some issues coming up when they go to renew. So there could be pressure on home sellers. There could be a lot more pressure on them that if inflation suddenly spikes back up again, or the economy slows down because of tariffs or whatever happens politically in the next few months, there could be a lot of people still choosing to sit on the sidelines. So that'll have impact on buyers and sellers. So look at slower growth, price growth. Now, regionally, there could be disparities. Southern Ontario tends to do a little better than parts of like Northern Ontario. You get into other areas where prices are still relatively cheap, but you're seeing this influx of people still from the bigger urban areas. Condos are another thing. Right now, the gold standard is still being able to get a detached home at an affordable rate in a decent location. So what have you got to do? How can you prepare for any economic storms? So one, focus on debt repayment. Get rid of the expensive debt, credit card debt, pay down car loans and any consumer loans that you've got. Clean that stuff up. Pay off the expensive high interest rate debt first. Then let's look at strengthening savings. Experts will tell you that you should have anywhere from 3 to 6 months worth of savings in the bank. So your monthly expenses, mortgage payment, taxes, that sort of thing. That should be your safety net. You should have 3 months of safety net, because if you think back to the lockdowns of the pandemic, there was a lot of concern there where people didn't have enough savings, that if they were off work or locked down like we were for an extended period of time, how were you going to survive if you didn't have those savings? And the third one I'm saying to look at is talk to the experts, talk to your mortgage specialist, talk to your accountant, or seek those people out. We're well connected with financial experts, whether it's in wealth building, mortgages, accounting, and we can connect you with the appropriate people if you want to consult with them and figure out what's your best path forward on all this. Now, looking ahead, I think 2025 is going to be a good year for real estate. Um, Things always are going to look different. This market has changed in so many different ways, but there is a lot of positive energy in the marketplace. Inventory levels have slowly built up. They're not where they need to be yet. So we still have some inventory issues. Interest rates have come down. Yes, that's good news. It'll be interesting to see those that renew, whether they choose to sell and downsize, how that can play out. Um, there's opportunities out there. So I think we're going to see there's a good appetite to see the market keep moving. I don't think we're going to see some incredible price increases. So if you're a homeowner thinking you're going to see double digit price increases this year, I don't think you're going to see that. But I do think you're going to see a robust market. You're going to see people willing to pay good money for properties that are in a good location, in good shape, and are priced right. So, as you're navigating this, if you've got questions, that's what we're here for. We're more than happy to have a consultation. Just click on the button here in this video and book a 20-minute session with us. We're more than happy to consult and make suggestions. And if we can do business together, great. And as a PS, you're probably aware we've changed MLS providers, so our MLS database have changed, and it didn't go quite smoothly as it was supposed to for our real estate board. So we've got data that's all over the place. So the reports, the weekly sales reports, the monthly stats, we're working on those. They're just not ready yet because we've got a lot of mismatched data. We've got a lot of missing data still. So we're doing our best to get that sorted out. If you've got specific questions about values and what's been selling, send us an email. We'll be more than happy to do the research for you. Enjoy the weekend. Thanks for reading. Thanks for watching. Thanks for being part of this community. Take care.